If you're thinking about going into business for yourself, then you might have come to the wise conclusion that acquiring an existing business might be a great way to start making money immediately. This is really great for people who don't have the ability to go sleep on their friend's couch for 3 years on a startup or move back in with mom and dad. This is Brian Stevens with the Thinking Outside the Boss series, and today we're going to talk about ad backs. What's an ad back? We're going to talk about that too. Okay, you're looking at somebody's business and they're showing you their profit, their taxes, their P&Ls, and all the information, and you're looking at them going, wow, these just don't make any sense. It looks like you're losing money, you're barely making a profit. And they say, yes, but there's these things called ad backs. Okay, so why do profit and loss documents or tax returns not necessarily represent the total at the bottom line of how well the business is doing? If you're leaving corporate America, you're leaving the military, maybe you're coming from another country, you've been working for someone else, you sort of saw your paycheck and you know they take a little out for taxes, but you knew that that's kind of what you had. Now you're looking at people's taxes or profit and loss statements and you're going, hold on, something's amiss. Well, look, taxes and profit and loss statements are generally crafted to minimize the owner of the business to have to pay no more taxes than they are legally required to. Some people do them so they're illegally getting there, but we're going to just talk about the mainstream of people that are just doing the right thing, but they're taking their taxes and they're having their accountants or their professionals help them so that they can write off, so they don't have to pay any more taxes or financials than they need to. But they're going to say, but wait, hold on a second, that's not telling the whole story. You have to carefully look to tell the whole story on profit, and they need to help you with that process. So suppose you're looking at this really great business. Maybe it's making $2 million in gross, and you look at the last year, how well it did. And again, this is just looking at 1 year. This is a real simplified conversation, and I remind people over and over again, if you're out there looking for a business, go talk to an attorney. Go talk to an accountant, get a professional intermediary to help you out if you don't know on that, and there's a variety of other people. But we're saving that conversation about the professional advisors for a whole nother show that we're going to do. So let's go back to my scenario. You're looking at a business. You can imagine whatever business dream you want to have, and this business shows that it's only making $10,000 at the bottom line. But the owner says, whoa, wait a second. I'm taking home like $170,000. And you say, well, show me the money. You know, how can this be? What's going on? How can you really be making $170,000 when your tax return from last year showed that you only made $10,000? Okay, reminder, and I'm going to say this again and again, go get professionals, get people to help you, get somebody that can help you with valuations, legal support. Don't go this alone, especially anywhere where you're not confident. But let's go back to that scenario that we had. The individual that says, I made $10,000, but I really earned about $170,000. And we're going to find out if she's telling the full story or not, and I'm going to keep this real simple, okay? So first of all, she says, look, on my tax returns, it shows that the owner, that's me, got $50,000. And you say, okay, there's $50,000, and you start adding up in your head, $50,000 plus the fact that there's another 10. So I see $60,000. And then they're going to say, but hold on, my spouse gets $24,000. The spouse does not work in the business. You know, she's running the company. He used to years ago. He got used to making $2,000 a year. Now they got the business running, and the owner is paying her husband $2,000 a month just for spending money, and they're writing it off. Is that legal? Is that proper? Go see an accountant, go see an attorney. That's not what I'm able to say, but I'm telling you, people do this. Now, it's really, really important to know the difference, because we're going to talk about a thing called seller's discretionary earnings, and that's just the earnings of one full-time working owner. If you're kind of a financial geek, you might know EBITDA and all these other terminologies. This is for business owners that are closely held, and it's that EBITDA, if you want to look that up, EBITDA, we're not getting into the details of it, plus all the information, all the income rather, that a single working owner is going to be. So if some family has 5 members all working, and they say our household income on this business is a whole bunch of money, you got to realize that you've got to replace all those other family members with the normal rate that you'd pay somebody to work if you're going to take over the business, because I'm assuming all those other family members besides the owner aren't going to move in with you and give you all that money, right? So we're talking about one working owner, and if the spouse that they're paying is not working in the business, then you can add that back in most cases. All right. So we've got the profit, $10,000. We've got the owner's salary, $50,000. Now a spouse that doesn't need to get paid when you take over. You don't have to write a check out to that spouse. Now they say, hey, we got this depreciation. And if you don't know what depreciation is, you can look it up, type it into your phone, and realize that this is a non-cash expenditure that the government allows for people so that they can minimize their taxes and in turn, have some money left over when they need to replace equipment or what have you, but it's there. I also meant to say amortization. That's another factor. That's sort of like depreciation, but usually for the more intangible type of things. We're adding things up. Okay, now the owner said, look, I've been in business for 40 years and I realized this place is kind of a dump, so I spent another $16,000. I haven't done that in 40 years. You won't have to do it for many, many more years. It's a one-time expense. 16 grand, repainted, put the glass in, put new furniture in the lobby, fixed up everything so it looks really, really great because I know I want to sell it. And I knew that buyers on the outside would be kind of nervous about it. Plus, I figured it might help get the customers rolling in again. So it's a one-time expense. One-time expense, good. If it's something they do every couple of months or every year, that's not. Now he's going to say, and I've got meals and entertainment, $20,000. I want you to alert to this for a moment. Meals and entertainment. Okay, we're going to come back and talk about that in a minute. So $20,000 there, and then the owner really loves her new Super Corvette, and she's spending another $10,000. And she says that's my CEO's rights and expenditures to come to work. The new owner doesn't need to even drive a car to run this business as long as they can get there. So let's go back and add everything up. You got the net profit, the $50,000 salary, the spouse money, the remodel, the depreciation, amortization, meals, entertainment, and the car payment. And there's the SDE, the seller's discretionary earnings, $170,000. And you go, wow, that looks pretty good. I'm going to make you an offer based on that information. But there's one thing, there's a lot of things you need to do. Bring in your team of advisors and all that sort of stuff. But one thing you're going to do is make an offer, but you're going to do your due diligence. Let's make sure that that owner, that the spouse is not really working the business and that the owner normally pays herself that, and that car is really not necessary for making deliveries or advertising piece, etc. And you check off all the boxes on that, like, yep. Gosh, that's great. Looks good. But then you get to the part of the meals entertainment and you say, well, what are you and your spouse going out to dinner every night? And the owner says, no. Oh, no. Every month at the end of the month, we get to everybody that's got birthdays and we celebrate. We buy cakes and we buy all this cool stuff. We give out awards for anybody that's had some great milestones, like been here for 5 years, 10 years, etc. We do birthday gifts. And then we also do some gift awards for the performance, best employee. No, we're spending that money every month, but you don't have to do that if you don't want to. That's why I added the $20,000. Now, you think to yourself for a moment, I'm taking over the business from somebody who's selling me the business, and I want to run it pretty much the way she is doing, at least at the very first, so I can collect that income that they're getting. Hopefully it's going to work that way. And you think, well, if I stop doing all the celebration and the fun stuff and the awards and all that energy, isn't that going to affect the way the employees respond? I thought this was meals for you and your spouse going out, having drinks and every Friday night sort of chatting over at the local bar and grill at some fancy restaurant. This is entirely different. And in this case, I would agree with the buyer to say, I think that is not a fair add back because this is essential to the business, even though it's under the category of meals and entertainment, which on the first level looked like it's something I would add back. So you would not include that in the add backs. So let's go back and challenge the buyer one more time. Yeah, everything else checks off. The net profit, owner pay, spouse money, I get that, remodel, blah, 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 blah. I'm crossing off the $20,000 in meals and entertainment in this case because it just doesn't comply. Now, this is a really overly simplified format. Sometimes there's not much more than something like this, but sometimes it can be more complicated. And of course, I'm giving nice, beautiful, round numbers so it's easy to add up. The K stands for 1,000 50,000, by the way, so 10,000, 50,000, etc. Right? So, but after doing some research, you come back to the seller and you say, yeah, I offered you a price based on what I saw at 170. Still love the business. Everything about it's great, but I need to change that price because I base that on a model of making 170,000, and really I'm seeing 150,000. But if we can get through that part of that rechange of the price, we can have a deal. Now remember, and I said this slide before, always consult professionals. Don't go it alone, especially where you don't know. Okay, I don't know if you have any other questions or other thoughts. Again, this is Brian Stevens with a Thinking Outside the Boss and BuyBizUSA, where we sell America's very best businesses. And I really want to encourage you to get out there, and if you have a dream, a passion, you want to get to the point where you want to own your own business, control your own destiny, do all those great things. You know, we're here to try and help people, you know, around the world for the most part. I got clients from all over the planet that come into us. You know, we have a training program. I'm not trying to sell the training program or anything like that. I'm just trying to give you some of the tools, ideas to keep things to under 15 minutes a piece, and I'm running out of time. So here I'm going to wrap up. By the way, you can see our website is buybizusa.com. You can reach out to us at any point in time. We're under the heading of the corporate name of Legacy Venture Group because we do more than just help people buy businesses. We help them sell, we help them value, and we help with exit planning and increasing the value of businesses. But we say when you go to buy a business, you begin a dream. And so our dedication and our principal philosophy at our company is to inspire, encourage, and empower present and future business owners to turn worthy dreams into valuable legacies through the process of business ownership transition. So make it happen for you. Reach out. Here's my contact information, or just check our website, BuyBizUSA. You'll find all the contact information. And if I can't help you, we have a really excellent team, and we're even looking to grow people around the country if you'd like. Anyway, God bless. Take care and make great things happen. Bye-bye.